The U.S. jobs market was stronger than expected last month, overcoming the uncertainty from President Trump's policies. Now, the economy actually added 147,000 jobs, and the unemployment rate fell to 4.1%. However, the growth was concentrated in just three sectors: healthcare, hospitality, and state and local government. Seasonal adjustments may have also contributed to the strong number. Jesse Rothstein is a professor of public policy and economics at UC Berkeley. He is also a former chief economist at the U.S. Labor Department, and I can think of no one better to speak to about this because it was a puzzling report for many. First, I want to get to, what you're calling this a statistical mirage. What do you mean by that?
Yeah, so thanks for having me. So the issue is it's very hard to count education employment in June when a lot of teachers go off work for the summer. And so what happened in June is employment in public education fell by over 500,000 jobs, but that's less than it usually falls in June. And so when we do our statistical adjustment, it looks like an increase. I think that's unlikely to be real. I think it probably reflects differences in the way the kind of survey week lined up with school calendars this year, but I wouldn't expect it to last. And if you take away that increase in employment in public education, that's almost half of the job gains we saw last month.
Yeah, which would have made it quite a weak report. I do want to talk about that private sector activity, pretty anemic, especially manufacturing and business services. So many of those white collar jobs that we're talking about that apparently don't seem to exist anymore. What does that tell you about what's happening in the economy at this minute? Because so many of the stats we see are looking in the rearview mirror, including when we try and look at things like GDP.
Yes, I think that's right. So we've been expecting this to happen for several months now. We know that there have been lots of layoffs, lots of job cuts at federal contractors and other kinds of businesses, many white collar workers, and they haven't yet shown up in the employment numbers. That's partly because when people get severance pay, they're counted as employed until that severance runs out. But I think over the next few months, we're going to start to see more of that show up in the jobs numbers.
I actually didn't know that. That is a very good point, because so many people in a lot of these companies that are doing well do tend to give out the severance, and that counts them as employed. The president just in the last hour, he got this bill. How do you think this new budget will change things in employment in the months to come? And I know there are so many factors at work here, but what's your best guess at this point in time?
There are lots and lots of factors, but I'll just pick out one thing, which is that you're hearing over and over again from hospitals that this bill is going to be a really big problem for them and that they're going to end up having to cut lots of jobs. Healthcare is one of the three sectors that grew this month, and it's one that's been keeping us afloat for a long time. And I expect that we're going to start to see quite a lot of softening in healthcare in the next few months.
It's interesting.
I think other aspects of the bill will also contribute to job losses, but I think that's the one that I've focused on the most.
You think that's the big one there. And in terms of getting any of these trade deal done, the businesses have been dealing with a lot of uncertainty. Some people are saying that if the trade deals are done, that there will be some acceleration in hiring, and that's the anemic manufacturing numbers that we see. Do you buy that? Do you think some good solid trade deals could give this a boost?
I don't think so. I think relative to what we had 6 months ago, even if the deals go through, there's still higher tariffs than we had before. And I think that's going to really eat into manufacturing. There are so many of our supply chains that are internationally integrated right now. And so even if some manufacturing is done here, they're using parts that are made elsewhere, and all those prices are going up. And I think we're going to start to see that in reduced manufacturing employment.
I don't have a lot of time left, just 30 seconds, but I do want to get this point in.
Sure.
I keep saying all the time that unemployment really is the canary in the coal mine. Let's be clear. The employment market in the United States is really healthy right now. But do you believe that that could change perhaps more rapidly than we're used to seeing it change?
Yeah, it's hard to know. Right now, the unemployment rate has been fairly stable. There was a little bit of a hint that may be softening this month, that we saw. It didn't show up in the unemployment rate itself, but there are extended unemployment measures that got a little bit worse. But I think if the jobs going to go away, then the unemployment is going to get worse.
Mm-hmm. Yeah, it's quite the equation there that we cannot escape. Jesse Rothstein, thank you so much for your insights. Appreciate it.